Frontline stocks managed some green, but mid-caps continue to slide with declines far outnumbering advances. Industrials and utilities are the biggest losers, even as financials gain on RBI's liquidity boost.
The RBI announces bond purchases, repo transactions and forex swaps to infuse over 1.5 lakh crore rupees over the next 2 months to the liquidity-parched banking system. Economists interpret this as a precursor to a rate cut in the Feb's 7th RBI policy. Bond yields fall while the Nifty bank surges nearly 2%.
Tata Steel posts a resilient performance with steady profitability despite a rise in Chinese imports. Losses in its European operations to trim, even as output from its new unit at Kalinganagar is seen driving growth.
The US President Donald Trump, in a call with the Indian Prime Minister Narendra Modi, has called for India to increase its procurement of US security equipment and to move towards fair bilateral trade relationship. Good afternoon. You're watching us here on Halftime Report. After a drubbing that we saw in the markets yesterday and the very recent past, it's good to see some green in the frontline indices, led by the Nifty bank, injected into life by the liquidity that the RBI has announced, or liquidity measures that the RBI has announced as well. A 2% up move on the Nifty bank has led the Nifty higher by almost 0.75% as well. What's not doing well is the broader markets. We have the mid-cap index, which is down almost 0.8%, though it's still recovered from the lows. We still have about 2,000 stocks which are declining for about 500 stocks which are advancing. But those lines seem to be coming closer as that index moves off lows as well. I'm Mangalam Malu. With me, Hormas Patakia. A lot of cues to track this week. We have the expiry, we have the budget and whatnot. Hormas.
Oh, an action-packed week. If yesterday was anything to go by, we all know what's lined up for the next few days ahead. But yes, it is a good thing to see some green on the screen after the drubbing that we saw yesterday. The Nifty now above the mark of 23,000, led wholly and solely by the banking names. It is the Nifty Bank with that 900-point surge in today's trading session that is ensuring that the index stays in the green. And who else but HDFC Bank to lead that pack? 1,000 points now on the Nifty Bank, now back above the mark of 49,000. HDFC Bank up 3% and multiple positive triggers actually for HDFC Bank, with Chris Wood also including the stock in its global long-only portfolio today. Axis Bank too is up 3%. ICICI Bank, IndusInd Bank, you name it, and those stocks are higher in today's trading session after that liquidity boost that came in from the Reserve Bank of India. The broader markets too, as Mangalam just mentioned, are recovering from the lows of the day. But there are plenty of corporate conversations that are lined up today, and Nitin Spinners is the first management that we have on the show. The company reported a stable third quarter performance. Now to discuss the quarter gone by, where the profit surged over 39%. The margins were also healthy. The company has also announced a capex plan of over 1,100 crore rupees over the next 24 months. Now we are being joined by Dinesh Nolka, the chairman and managing director at Nitin Spinners. Mr. Nolka, good afternoon. Thank you so much for joining in. First, talk about your capex plan, sir. You've announced an 1,100 crore rupee capex. What does that do to your capability? And first, if you could tell us your existing utilization levels, what does that do once the capex comes on stream, and how does that boost your financials?
Good afternoon. Thank you for having me on the show. We have announced a capex of about 1,100 crores, which consists of an integrated spinning, weaving, and processing plant to make the fashion fabrics. So this particular will be located at one of our existing facilities in Chittorgarh district in Rajasthan. So we are adding, will be nearly doubling our capacity of the woven fabrics, which we already have. Our existing facilities are running, especially in the spinning, above 95% utilization level. And in the fabric division, it is running at the 90% plus capacity utilization. So looking into the capacity constraints, we thought of increasing the capacity, adding more products into our portfolio. We were missing certain fashion products in the portfolio, so like to add that, and accordingly have planned for this capex. So this should basically give us a revenue, additional revenue of about 1,000 crores going forward once this is completely up and started.
All right, 1,100 crore capex in the next 24 months adds 1,000 crores to your revenue as well. Thanks a lot, Mr. Nolka, for joining in. Always a pleasure speaking with you. In the very near term, if you could give us a sense of, how the spreads are between yarn and fiber, How is that likely to impact your margins in the very near future?
At this point of time, the spreads have been quite stable for last 2-3 quarters. As you can see, we have been running at a
Yes.
stable EBITDA of about in the range of 14 to 14.5%. And we expect this to remain like this. There has been cotton prices have been continuously sliding. If you see in last 1 year, they've gone down by about 15%. And similarly, yarn prices have also gone down by nearly 8 to 10%. So now we are feeling that this is a kind of a bottom of the prices internationally as well as in India. So looking from here, we feel that the cotton prices should be stable and move slightly upwards, looking to the overall situation, and then accordingly the yarn prices should move.
So stability in cotton prices, slight up move. Your spreads would remain the same, or would you see some narrowing of the spreads? Because right now we've seen some expansion. If the yarn prices have reduced by about 8 to 10% and cotton reduced by 15%, you've seen a slight widening in spreads.
It is more or less in a similar range. Basically, cotton prices have, if you compare with last year, definitely spreads are better. But if you go with the long-term average, I think spreads are still on the lower side. So we expect this to remain like this. We have seen that some of the capacities, smaller capacities, and old equipments have also gone out of system. This has balanced the demand and supply situation at this point of time. So that has actually created a reasonable platform for the good companies.
But what is the demand supply situation currently on ground, Mr. Nolka? Because majority of your revenue comes from the export markets. But what are the trends that you are witnessing both overseas as well as in the domestic market when it comes to demand?
As far as demand is concerned, overseas we had a very tepid last year, 2023, where the demand was substantially down. The average exports of cotton yarn from India was in the range of about 55 to 60,000 tons every month on an average basis. This has improved up to about 90,000 tons to 1 lakh ton. On the peak of it, we have gone up to 120,000 tons average also a couple of years back in 21-22. So we expect that still there will be scope of improvement going forward as well in the quantities. So that is the expectation at this point of time. We are seeing that demand is coming back slowly in international markets. European markets are also now stabilizing, as well as US is again picking up. We are seeing good demand of various kind of products, textile products in the US as well. As far as domestic is concerned, we feel domestic has been very, very stable. However, some of our garment exporters have received very good orders of late from the various international brands, and that is kicking in the demand scenario in the domestic as well.
All right, just before we speak about some more things, Mr. Nolka, typically textiles is spoken of as one of the beneficiaries of the weakening rupee as well. So what kind of impact do you see on your financials in the very near term on account of the weakening of the rupee that we've seen? What's your hedging policy here?
We are normally fully hedged. On the revenue is being hedged normally on a weekly or a half month on a 2-week basis. So whatever the benefits of rupee weakening will come, that will accrue to us after maybe 1 or 2 months only, once as we get the new orders. So there is actually rupee was overvalued, and that was hitting our competitiveness as well. So now, once the rupee is coming to the realistic levels, we are finding that the exports is becoming better, and going forward, the margins also should improve accordingly.
All right, so then that leads me to my final question. One is on your margins, because you are increasing your capacity from the woven end of things. Now your margins are closer to 20-odd%. You've been in this 15-14% range. So with increased value contribution coming in, what are the margins likely to be here? And the second part, you've taken on some debt as well. Last known debt was close to 1250 crores. Additional 800 crores for this capex brings your balance sheet to a debt of 2000 crores. So when do you plan to, repay this debt? What could your peak finance costs be as well? So on margins and peak debt repayment plans.
Let me first address your second question. Wherein about the debts, we are regularly paying off our debts. About 175 crores of repayment is there every year. Since all these debt which we have taken is under concessional interest rates, so we do not want to prepone some of these repayments. Once after 2 years, when our capex will be completed, our total debt to our equity will be in the range, including our working capital debt, will be in the range of about 1.15 levels, which is same as what it was in the year 2024. So this is as per our stated policy itself. Our long-term debts are nearly at 0.75 to our total net worth. So that augurs pretty well in comparison to in this industry, in textile industry. As far as the margins are concerned, definitely the new expansion which we are taking is will be margin accretive because it's a completely integrated plant. So it will be margin accretive to our existing margins. Since this is a cyclical industry and we have various kinds of issues, geopolitical issues, as well as the domestic government regulatory policies which affects our margins, we feel that given in the similar conditions, our new expansion will add to about 150 to 200 dips to our existing portfolio, existing profile itself.
That's the answer that we were looking for, Mr. Nolkar. Thank you so much for sparing time and joining us today. Wish you good luck for the expansion plans and for the road ahead as well. The management of Nitin Spinners expecting 1,000 crore revenue addition post this new capacity expansion and 150 to 200 bips on the margins. And you can see the impact on the stock price as well. At the highest point of the day now is Nitin Spinners at 377. Take a short break, but before that we dive into Growth Code, which is an initiative of Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, SEBI's whole-time member Anant Narayan shares his insights on the newly introduced F&O trading guidelines and the rationale behind this. Let's listen in.
Overtrading, particularly on expiry day index options, was creating the possibility of more systemic risk with an increase in the overall market risk right up to the time of the expiry. So these two areas, one is a systemic risk area, the other of related to investor protection, is something that we were looking at closely, and we were consulting with market participants for months together. Our consultations told us that the issue really boiled down not to the broad swathe of derivatives, but specifically to the issue of index options trading on expiry day. So it was a very clinical approach that we subsequently adopted, essentially to address this specific issue of overtrading in index options on expiry day. On October 1st, 2024, we announced a series of 6 steps to address this. 5 out of those were directly aimed exactly at this, curbing overtrading in index options on expiry day. Now, the impact of those steps are still playing out. We will watch the data very closely to see how things stabilize. As and when we come to a conclusion on what the impact of these 6 steps have been, if further steps are necessary, both for market development as well as for investor protection, we will take steps accordingly. So at this point of time, nothing is planned. We will see what the data shows, and then we will take the steps further. But there should be no doubt about SEBI's broad objectives here. We want a sustained F&O market that is conducive to capital formation in the country. At the same time, we want to ensure investor protection and we want to ensure systemic stability. And we will continue to work along these lines in consultation with all market participants.
Welcome back. The broader markets continue to recover. The mid-cap index is now just 0.4% lower. When we started off the show, it was 0.8% lower. So the recovery continues in the broader markets, is almost turning into positive territory now is the mid-cap index. You pull up the small-cap index as well. That too still trading with losses of close to 2%, but still off the highs of the day. But what are some of the key budget expectations of the steel industry? Nigel is joining in with more on that. Nigel.
Well, the industry's plea is for protection from steel imports. But let's give you a quick background first up. The domestic steel consumption has been very, very strong. We have witnessed the highest steel consumption in the month of December 2024, which clocked close to around 13 million tons. Now, slowdown fears have weighed on sentiment, but the government's capex, the infra recovery as well, that should aid steel consumption even in Q4. The problem has been on steel imports, and that's finding its way into the Indian markets. And so the Steel Ministry, they have proposed to the Finance Minister to impose 25% safeguard duty against low-cost imports that are coming in from countries like China as well as from Vietnam. The intent is to restrict imports which are affecting the domestic volumes. Well, Chinese exports have been weighing on the global steel industry as the real estate market out there continues to struggle. That's resulting in a slowdown out there, thereby encouraging large amount of steel exports from China. Now, in 2024, Chinese steel exports, well, they ballooned by close to 20% and they clocked close to around 110 million tons. That's the highest export number that's recorded since 2015. Well, the higher Chinese exports, that's exerting pressure on global steel prices. In turn, since prices are coming lower, margins are under pressure as well. Now, in the first 9 months of FY25, the steel imports, they have moved up by 16%. While steel exports from India, they have come down by 16%. Because the Chinese exports, they are flooding the global export destinations of Indian companies. So they're eating into our export markets as well. The steel companies argue that they need support from the government of India. They have laid out ambitious capacity addition plans for the next few years. They're incurring huge capex. So they are telling the government, we need your help. We need to get protected. So the DGTR, well, they have initiated safeguard investigation on imports of many types of steel. Ambit says that the past trend suggests that it will come only by the second quarter or the third quarter of the next fiscal. Hence, they believe that safeguard duty is likely, but not imminent. Let's see what the government comes up with. But the steel companies, they believe they have a solid case that there could be some protection in store for them.
All right, Nigel, thanks a lot for that. So that's about the steel stocks and the steel sector in focus ahead of the budget. But we'll keep an eye out on the markets. Sachidanand, taker of Trade Bulls, joins in with some trading strategies on the other side of this break. So dramatic recovery that we're seeing in the mid-cap end of things as well. Now it's down by just about 200 points. At one point, the mid-cap index was lower by over 1%. Right now, there's been a big recovery. Just beneath the flat line is where we're seeing the mid-cap index. And if you look at, the way some of these stocks are doing as well, you have Bajaj Finance from the broader markets, or rather the frontline end of things, doing extremely well. So let's get in a setup from the F&O pack. More important because 2 days later, we have the monthly expiry play out as well. Indices today led by the Nifty Bank, a big a power coming in from the RBI, and as a result of which that boost 1,000 points. And the top 3 batters for the Nifty, Axis Bank, ICICI Bank, HDFC Bank, all of them going out and scoring, fairly well for the frontline index. The broader markets, which sold off, both the mid-cap and the small-cap indices are lower. The mid-cap index has recovered. The small-cap index still under pressure with a 2% cut. If you look at the advanced decline ratio as well, at one point you had over 2,000 stocks in the red, and now those lines, after making that little bit of a bulge, are coming closer to each other. So the second half of trade will be extremely crucial to track. For the Nifty, 22,950 put writers very active. That we've seen a recovery tells you that, around 22,850 to 22,900, there could be strong support coming by for the index ahead of expiry. But 23,000 call writers are still fairly active. We're seeing some bit of short covering out here. But if the market sustains above 23,150, 23,100 to 23,150, we could see a further leg of short covering powering the market up ahead as well. Stocks that I'm watching out for: ABFRL exited F&O ban last evening, may re-enter today, and MGL may exit F&O ban today. So we'll keep an eye out on these counters.
What a recovery in the broader markets as well. And the index too, continuing to build on, still holding on to that 23,000 mark. Sachidanand, the taker of Trade Bulls, joins in now. Sachidanand, good afternoon. Thank you for joining in. You're finally seeing some bit of respite for the Nifty, at least for now. What do you do in such a bounce? Do you see this as a sustained trend to move back towards that 23,500 mark? Or would you say, okay, this is a bounce, you can use that to exit your positions, and also your stock recommendations for the afternoon?
Good afternoon, Harmos. Good afternoon, Mangalam. I think clearly, if you look at both the indices, Nifty Bank is looking more confident. And after a while, it is leading this confidence. So I think when we look at both the indices, Nifty has managed to, surpass yesterday's swing high, but it will be crucial for it to, sustain about that 23,100 mark. At least for the day, that particular level looks like a resistance. But when we look at Nifty Bank, I think the trajectory is very much clear till 49,500. We have seen a good, solid, writing, which is placed somewhere close to around 48,700 now. So we are looking at an elevated base. The 48,000 base was revisited a couple of days back. We saw a double bottom kind of formation. And from there, there has been a very strong, confident rally. So I think Nifty Bank is where the momentum can be chased. Even right now, if we see a decline of 100, 150 points on the lower side, I think 48,850 would be an ideal level wherein fresh long positions can also be deployed. On the higher side, we're expecting a move towards 49,500. When we look at stocks, clearly Bajaj Finance will be coming up with its results tomorrow, and the way it is positioning itself ahead of the results, especially on the weekly charts, if you look at the weekly RSI, it has managed to give a fresh breakout about its previous swing. Plus, the weekly ADX has been sustaining about the 25 mark. So I think it is a very good, strong sign of a sustained momentum. We have seen a good contraction in range in the last couple of trading sections. It looks like a bullish flag formation. So eventually we are looking at a price target somewhere close to around 77.30, and that's why we are recommending building long positions even for our clients. On a decline up to 75.30, one can still accumulate this counter. Stop loss should be placed at 74.20 on a closing basis. We may see a swing towards 77.30. The other stock which has hit our radar, where we are seeing a short squeeze, is Scotch. Now, if you look at the sequence, it has been maintaining a strong higher to par bottom sequence. It was sustaining well above its 200-day exponential moving average last week, but we saw a sudden dip, and that particular dip has been bought in. So even here, the data is suggesting that the range which has been established at 3,400 to 3,600, we may see a swing back towards the higher end of the range, which is placed at 3,600. And that's why we are recommending building fresh long positions in Scotch. The stop loss for the trade should be placed at 34.35 on a closing basis.
Sachi, thank you so much for joining in and giving us your view on the markets and a bunch of stocks. We take a short break. On the other side, we'll speak about the market for parks, for amusement parks. Arun Chitilapalli of Wonderla Holidays joins in for their third quarter earnings. Stay tuned. Welcome back. You're watching us here on Halftime Report. The stock on our radar right now is Wonderla Holidays. Reported a weakish set in terms of performance. Why do I say that? Because seasonally strong quarter, the footfalls actually declined by about 1.5% over the same time last year. And as a result of which, along with the expansion that the company has undertaken, the expenses have increased. So that revenue decline of 1.7% has actually led to a bigger decline that we've seen in the EBITDA and the profitability. And understandably, the stock is under a wee bit of pressure as well. Arun K. Chitilapalli, who's the MD at Wonderla Holidays, joins us now. Arun, thank you so much for joining in. It's what's affecting consumer sentiment, and by when do you expect footfalls to return to positive trajectory? That's point number one. The first 9 months of this year as well, we haven't seen great shakes when it comes to footfalls, right? You were expecting the footfalls to be flat to marginally negative this year. Do you have a better handle on where this will be by the end of this year?
Mangalam, always a pleasure having a chat with you. So thanks for having me on the show. Yes, like I said in the beginning of the year, this year is looking a little tough for various reasons. One is, I think, the sentiment of customers across discretionary spends has been a bit weak. And on top of that, we also have inclement weather and those kind of situations kind of playing havoc with our footfalls. You have to understand that an amusement park, literally, we need to get footfalls into the parks, and people should feel like coming out. So those sentiments have been a bit weak in the last quarter also, especially for our new park in Bhubaneswar, which was hit by 2 cyclones in the last quarter. So I think that has really, spoiled the party for us. But otherwise, some bright shoots for us. For example, Hyderabad saw a footfall growth after a while. We are seeing some improvement in demand in Cochin as well. Bangalore continues to be a little weak, but I think by the end of this year, I mean this financial year or beginning of the summer, which again is the next big season for us, I think we can see some improvements. I should also caution that this is because of the big base that we had in the last 2 years. So that could be another reason why we are seeing some softness this financial year.
Arun, good afternoon. But you mentioned that your park in Bhubaneswar was hit by 2 cyclones in the quarter. What does that do to your full year target for footfalls there? Because you had mentioned for 3.5 lakh by the end of the year. For the first 9 months, you've done only 1.25 lakh. Presumably, you would fall short?
Yes, I think we had projected 3.5 lakh footfalls, but I think we should still end up with a 2.5 lakh, between 2.5 and 3 lakh for the year is what we are hoping to do. But either way, what we have also realized is Bhubaneswar as a market is highly dependent on summer. So the summer weightage for footfalls is going to be higher compared to the other quarters. So and it's a new year, new park and new location for us. So I think the first year you can expect some of these issues to kind of exacerbate the issues we already have in terms of footfalls. But I think over the year, what we are expecting is, I think next year onwards, we should be able to see good footfalls. The season there starts early in March, so I think we should see some growth as well.
All right, Arun, we usually speak quarter after quarter, and this is a business where over quarters, not much changes, but over years, a lot changes. You've recently raised about 540 crores by the QIP as well, beginning to deploy it as we have the visibility for the next 12 months or so. In December 2025, we have the Chennai park coming in as well. But if you look at the business from a long-term standpoint, you get the money, you get capex, incur it over adding new parks. That happens, say, on an average every 3 to 4 years odd. And then you have the annual maintenance expenditure that you do as well. From a revenue standpoint, it's dependent on how much people spend every time they visit the place, and more importantly, how many people visit that place itself. It's footfalls into spends per head. How do you make this business a lot more, resilient to the vagaries of the environment right now? Because what we're seeing right now is you are doing your bit, but the new capacity comes in only once in 3-4 years, whereas the dependence on footfalls or the people who are coming in is fairly variable. How do you make this a lot more exciting, and how do you, make this a lot more resilient as against this sort of variability that we're seeing?
So there are a couple of things, Mangalam, that we can do, which we are already doing. One is to have parks across more geographies, which are more divided across different locations. And this has been our endeavor, for the last 4 or 5 years to try and have parks in various different geographies, so that even if 1 or 2 locations get affected, the other locations can, kind of cover up for it. The other big initiative that we are doing is online bookings, pre-bookings, even at a discount. So these are the 2 things, and that will help us lock in footfalls and can kind of give us a little more of a hedge against, sudden variability in footfalls. If you look at our online bookings that have happened in the last quarter, it has almost doubled compared to the same quarter last year. So I think that gives us a lot of hope that we can do that going forward. And as a geographical expansion, like you said, we are opening Chennai. We are also looking at maybe adding 1 more location by the end of this financial year to the portfolio. So I think we will definitely keep trying to expand geographically as well, and also using online interventions to make sure that we can lock in footfalls. So these are the 2 things that we can think of immediately.
In the world of AR, VR and all these things, is there a way you can, make the brand experience a lot more democratized than just limited to the geography itself? And that reduces the lead time as well. I mean, if I have, say, small AR cubicles across multiple parts of the country, you can easily make it, you can give people the Wonderla experience without them actually having to visit Wonderla, and that becomes a feeder for the store. Just thinking whether you're thinking on those lines, etc., to leverage the brand Wonderla to, revenue as well for you.
See, so AR, VR is something that we are also embracing, and we are in fact launching a new attraction in our Bangalore park this quarter. It's a large AR, VR attraction. But I think the real promise of a Wonderla experience is having a day out from your normal day in a beautiful surrounding. So that I don't want to dilute it too much by doing something smaller in the city. And the moat for something like that is much lower. So we feel that anybody, so those are easier, smaller capex items, and anybody can do that. Whereas to get a full Wonderla experience, you need to come to a large place and just take in that whole ambience and forget your day. So the normal day in your life. So that is the whole brand promise that we have. So it will be difficult for us to completely digitize it. And we don't want to also in a way, because I think this is going to, human experience in terms of spending a day with your family or friends. It has to be not virtual also. So that's what we believe, and and that's, I think that trend will continue as long as I think we seek human connections and things like that. So I don't think that can be completely virtualized. So we feel that we want to geographically expand, but we don't want to dilute it by, for example, having multiple centers in each city and things like that.
All right, Arun, thank you so much for sparing time and joining us today. We wish you a wonderful 2025. That is the management of Wonderla Holidays there, with the road ahead for the company. Time for a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app, where you can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app now from the Apple Store or the Google Play Store, and you can just scan the QR code that will come up on your screen, and you can download the app after scanning that QR code. Take a short break. Be right back with more. Welcome back. The Nifty still continues to remain above that 23,000 mark, trading with gains of around 180 points. The mid-cap index that was recovering from the lows of the day, but there is plenty of stock-specific activity that's taking place in there. Hitachi Energy is down 17%, and numbers of Apar Industries were just flashing on your screen a few minutes ago, and that stock too has taken a bit of a knock after the earnings announcement. 16% lower now is Apar Industries. The margins were down, the profits were also down on a year-on-year basis, and Kaynes Technologies at one point was down 20%. That has seen some bit of recovery from the lows of the day, still trading with losses of 20%. Remember, the management has cut its guidance for FY25 on the revenue front, so 15% down on Kaynes Technologies as well. But the Nifty Bank, though, that's continuing to build on the gains, now nearing that mark of 49,100, led by all the large cap banks, 1,000 points higher on the Nifty Bank, led by ICICI, HDFC and Axis Bank. Take a short break. On the other side, Manisha Gupta joins in with Praful Vitlani, who is the chairman of the All India Sugar Trade Association. Stay tuned. Back on the other side.
Welcome back, and let's talk sugar now. And there have been various reports on how the sugar production this time around could see a decline. Remember, to begin with, it was a delayed start to crushing, and there is expectations, and there are various reports that the crushing could be ending early as well. There are losses that the street is facing in sense of Maharashtra, Karnataka, even UP for that matter. Over the weekend, a lot of sugar industry joined in together, and ISTA has come out with a report on what really could be a number to begin with for this year's season. Praful Vitlani is chairman at ISTA, and he joins us on the show now. Mr. Vitlani, hi. We have various numbers coming in from various sugar associations, agencies, and it does feel like it's going to be a lesser sugar production this year as compared to previous year. But has the gathering over the weekend, which was led by you, been able to come to a stronger number?
Yeah, actually, every year we don't have a physical meeting. This year was a unique, and we had a seminar physical at Bombay, where all various sugar mills, then FMCG, then all MNC companies were there, and they have given their view. We have said we are not here to give you the number today, but we will give you after 2 days. But here we are to listen you, since we are confused. the way the difference was coming from 28.5 and our number was coming 26.5, we had this seminar, and yesterday we again had our crop committee meeting, and now we are with our number first time in this season. As usual, that is in the last week of the January. We are looking Maharashtra and Karnataka losing 25% production because of the, the heavy capacity extended, and crushing capacities are very high. So it is a very small season likely to be, as well as government's right step of giving 4 million ton permission for ethanol blending. So yes, the season looking 25% lower for sugar in Maharashtra, Karnataka, and 15% lower in UP because of some, disease in the cane. And yes, we are looking at 17% down all over India, from 31.9 to 26.52 million ton of sugar in India.
So, well, it is lower production, and we've seen prices gain up on the back of that. The prices also have gained on the back of expectation that India would start to sell its sugar soon after that notification of 1 million ton of export has been allowed. International markets saw that news and now have reverted back to where it was. The Indian markets as well seem to be stabilizing slowly. How would you look at that?
See, international market came down with a hype. And since the March month works for 4 to 5 months, and there is a, bulls and bears are to each other, this thing. But I think that what the yesterday close is, around 19 will prevail, and there will be a range of 19 to 21 for another 1.5 months till we can say March 15. And after that, I am looking somewhere around 21 to 23. And whether it is international market or it is domestic, I am not looking downward trade in this actually. Domestic, there is of course no question of any southward trend. We will have some northward only. But our cost of production is also around 37.50, 39 average basis. And in Maharashtra still we are at 36, so 2 rupees below the cost of production. If it increases, that doesn't make any difference.
Well, yeah, absolutely. The cost of production has been rising and we haven't seen the minimum selling price increase. And of course, the ethanol pricing also is something that the markets are awaiting at this point in time. So those two things still in abeyance. But Mr. Vitlani, also, how are you looking at the budget this time around? A lot of things when it comes to sugar as an industry do happen outside budget. But is there anything that you are looking forward to from the finance minister in this budget?
This finance ministry budget, we are looking particularly to, give support to the sugar industry, basis of ethanol price increase, MSP being introduced. That this was a cyclical commodity before 2014. Now it is no more cyclical, this thing, So that is there now. GDP is slowing down. The industry is in pain. The middle income group, small income group, they are also in pain. And I will wish that the way the stock exchange has crashed, government has to give some benefit on STT, or maybe some long-term and short-term what percentage of taxes are there. That's not to touch. That things we are expecting from the finance minister. Okay. One thing more, I would like to say that 79.8 in sugar was the closing stock. We were 2 million ton higher, and production of 26.52 will give us a 34.5 availability, of which last year consumption was 29.7. We are calculating as 29. Okay. And that export of around 10 million ton, which is already allowed. So 1 million ton. So we will left with 45 lakh ton. 4.5 is slightly hand to mouth, but that can be taken care.
All right.
All right, take that point. Thank you so much for joining in. You spoke about STT and LTCG, short-term capital gain, the way the market's going, I don't think anyone has any gains for them to be paying any tax. But we take that point as well. But you've joined us on good time because the mid-cap index has now moved into the green. The Nifty doing extremely well, up over 200 points now. 220 points. The market's at the high point of trade. 1,100 points taken by the Nifty bank itself. So all these indices surging, led by stocks that have been doing well all since morning, which is the financial space. So the banks leading the way ahead, and the financials as well. Shriram Finance now up 5%, Bajaj Finance up 4% as well. The small cap index still lower by about 1.5%, but has recovered dramatically from the lows as well. Take a short break, come back. On the other side, we have the team of Business Lunch take the market action ahead.